It's really good. It's really good. Back at it again. If you ain't on the Instagram, what are you doing? Link trees in the bio. Go follow up. But essentially, Discord, my Discord and the signals finished with a 90% win rate. Jeez. I signaled 8 trades. We won 7, lost 1. So rounded up 90% win rate. And then myself, I took 11 trades, won 10, lost 1. And that's a 90% win rate, rounded up 91%. So absolutely beautiful week. Every single day other than Monday went 2 for 2 on all the trades that were taken. Absolutely beautiful. Give all praise and all glory to God. But essentially, Friday we had a really big move that I predicted on Tuesday night within PayPal, a big old crash, as you see right here, which is a 1 to 21 RR. Obscene, well over 400% within like 15 to 30 minutes of market open yesterday, because today's Saturday. All right. Absolutely beautiful trade. And because of that, just taking that whole move, that's just like, that's what this week's video is going to be on, essentially. So we're going to be talking about market structure, which plays into market analysis, understanding what market structure is, respect, disrespect, continuations, and just overall sweepage to lead to a reversal and all that good jazz. You feel me? So then you could also predict big moves just like this previous before they actually happen, and also get 400+% profit gains in again 15 to 30 minutes. 400 and it was like 440% on this move alone in 15 to 30 minutes. Obscene. You feel me? And I give all praise and all glory to God. But yeah, let's get straight to it. All right. So first things first, let's talk about overall market structure. We're gonna move to Apple real quick. Gonna bring me to it. There we go. So we like to see. All right. So market structure is going to be made and created by higher highs, higher lows, lower highs, and lower lows, which ultimately are trends. All right. So market structure is really just trends. You feel me? So in this case right here, we are in a bullish trend. Therefore, the structure is towards the buy side. All right. And then down here, we were in a bearish trend. So the structure was towards the sell side. All right. Now, what do I mean by bullish and bearish? Where bullish, to people, and what I used to tell myself when I first started, bullish trends are buy side trends. We're buying, we're pushing upwards. So think of a bull picking you up by its horns. And then a bearish trend, think of a bear coming down on you, trying to get you. You feel me? Because a bearish trend, we are selling, we are coming down. And a bullish trend, we are picking up, we are going up to the moon. All right. So think about it like that. And overall, what a bearish trend is when price forms lower lows and lower highs. The high points before price sinks down are the highs, and then the low points before price picks back up are the lows. All right. So in this case, price dropped all the way down here, forming a lower low than the previous low, which was right here. And then it pulled back, forming a lower high point than the previous high. Then it sank down, forming another lower low, then pulled back to form another lower high, then sank back down to form another lower low. That is a bearish trend, forming lower lows and lower highs and continuing. All right. And then with a bullish trend, it's just the complete opposite. All right. So right here, we got a higher high, higher lows. As we'll do right here, we got higher high than here. We got a higher low than here. Pushed up more, higher high than here, higher low than here, and then pushed up higher high, etc., etc. So that would be a bullish trend. There's higher highs and higher lows. Again, the high points are the highs and the low points are the lows of an overall continuation. All right. And now that we understand that what market structure is, bullish and bearish trends, and what form them and what they are essentially, now we need to just talk about respect of structure, essentially. So market should respect structure. Market respects structure. That's why when price is in a bearish trend, instead of price coming up and breaking the last lower high, it gets close to it before it pushes down more, forming a lower high than the previous lower high, and then ultimately forming a lower low than the previous lower low, and vice versa with the buy side trend, because that's how the market moves. It respects structure. Therefore, price, whenever it comes to pull back up like it did here, should not break this lower high right here. It should respect the structure. And then vice versa is right here. Price, this low should not break this higher low right here because it should respect structure. All right. Only thing that should be broken when it comes to moving in an overall trend are the high points of a bullish trend and the low points of a bearish trend. So with a bullish trend, the lows should not break the previous lows, but the highs should break the previous highs, because ultimately it has to form higher highs than the previous highs, but the lows still have to be higher than the previous lows. Therefore, the only parts of a bullish trend that should be broken are the high points, because it has to form higher highs than the previous high. And then the low points should be above each other, forming higher lows each and every single time. Because if it breaks it, that disrespect structure, and that lets you know that, hey, we could be going in a completely different direction now because of disrespected structure, essentially. All right. So that's why this low doesn't come down and break this low, because of respect structure. And that's why this high doesn't come up and break this high, because of respected structure in a bearish trend and in a bullish trend. All right. And then again, that's also why this was a bullish trend, because not only did it break the high, but also formed higher lows than the previous lows. Therefore, it's doing everything it should be doing as an overall bullish trend. And same thing with the bearish trend. All right. Now, sometimes, which is what's called a liquidity sweep, is sometimes price will come up and or come down and break those previous lows and previous highs. So this high could have easily came up and broke this lower high over here. You know, say boom, boom, boom. All right, it could have easily did that. And same thing with this low down here. All right, I know those lines aren't perfectly straight. All right, let's just boom, boom, boom. All right. Price will sometimes come up, when a bearish trend, it'll come up and break the lower highs, and then on a bearish trend, price will come up sometimes and break those lower highs, and in a bullish trend, some price will sometimes come down, breaking those higher lows, essentially, or the previously higher lows, and then the previous lower highs in a bearish trend. And that's what is called a liquidity sweep, which then there are two forms of that. You have continuations and you have reversals. All right. So if price comes up, in this case on a bearish trend, and breaks that, but the body closes above this line in this sell side direction, because it's in a bearish trend, meaning that price needs to close below, not above this line. If price closes above this line, then that lets us know we can expect a continuation to the buy side to other highs within the area. And then if price closes below the liquidity line in this overall trend, then that means we can expect price to continue all the way back down, or reverse all the way back down, coming from this mini uptrend and reverse back to a sell side direction. And then vice versa with the buy side, is we can expect price to break here with the liquidity sweep. And if the body closes below, so like it did here, then we can expect price to continue to the sell side direction, or the direction that it broke in disrespected structure, which in this case would be to the sell side. But if the body closes above that line, we can expect a reversal back towards the buy side. So now that we got that out the way, now that we understand market structure, we understand respect and disrespect within market structure, we understand liquidity sweeps and continuations that help add on to our confluences of overall market structure within the whole analysis, and we can understand if price is going to continue in a set direction or not. Now we can go into examples of just predicting the future, essentially. Let's go straight to PayPal. So we'll get this out the way. So this is what happened Friday. Tuesday, when I was overall analyzing the market on the hourly time frame. This is the 2-hour time frame that I mainly analyzed this on. But essentially, obviously, bullish trend. We got higher highs and higher lows. Clearly, we see more blue than we see black, right? And then price came up here, formed a higher high, formed a higher low, but then it also formed lower highs, all right? That defeats the whole purpose of a buy side trend, a bullish trend, because price should have pushed up, formed a higher high, pushed down, formed a higher low, and then pushed up and formed another higher high. That is a bullish trend. That's what we should have expected. But instead, it pushed down, it pushed up, formed a higher high, pushed down, formed a lower low, and then pushed up, forming a lower high right here. That let me know, ooh, we formed a lower high in an area where it should have formed a higher low. I'm sorry, if we formed a lower high in the area where it should have formed a higher high, that let me know we can expect a breakage of here. And if we do get a breakage there, then we can expect a complete crash within PayPal. All right. And that's what I did. And I looked at previous, like 5 different other stocks, which we'll go back to Apple to do the same example. And every single thing was the aftermath of what happened Friday with PayPal, which was price pushed up from the higher high, higher low, lower high, and then price broke that higher low, continuing all the way down, forming a new lower low. And that's exactly what I saw within PayPal. That's exactly what happened. This was a 1 to 21 RR, a total of 440% profit gain in like 15 to 30 minutes. It was freaking obscene. And I give all praise and all glory to God. All right. But this is what I mean by understanding market structure. You see, if you understand market structure and you understand that in a bullish trend, we should be forming higher highs and higher lows. And if we're in a bullish trend and it starts to form lower highs, then we can expect a lower low to be made if price breaks that previous higher low and a continuation to the sell side forming lower lows. Because ultimately, price should not have made a lower high in a bullish trend. It should have continued making higher highs and higher lows. But in this case on PayPal, it formed lower highs and then ultimately now it's forming lower lows by breaking that previous higher low, essentially. If you need to run it back, slow it down. You feel me? And then this is what the trade looked like ultimately on the 5 minute time frame. Beautiful. Essentially, price came back, tapped into a supply zone and an old gap within the area before it started showing tons of sell side pressure. Beautiful. All right. Going into Apple now, same thing. Bullish trend formed a higher high, higher low, but then it formed a lower high right here. Shouldn't have did that. It should have came up forming a higher high than another higher low. Instead, it formed a lower high right here, broke that higher low, and this could have been big put options all the way down until price decided to stop making lower lows or stop and then make a new lower low before coming up and making a lower high like it did right here. All right. So again, predicting the future, quote unquote. So if you were to have acknowledged this, Friday the 30th, or I'm sorry, if you were to have noticed that price could very much break this higher low because it's forming a lower high right here on, like the 30th of Friday, then yeah, you would have easily saw that and boom, you could have took that whole thing because this all happened on Tuesday. You feel me? If you simply knew about market structure, how to analyze the market, and actually knew how market structure works, and when it comes to respect and disrespect, and how the flow should be moving overall, if you understood that or do now understand that, then you could predict these big moves as well. You see what I'm saying? You could have easily, boom, price broke that low. We're in there, stop loss above that previous high, take it all the way to, we'll say, the gap, just to be less risky because once it did get to the gap, it did push back up some. Going into NVIDIA, all right, we were forming again higher highs and higher lows, etc., etc. We were in a bullish trend clearly until boom, it formed this higher low right here, formed another higher high, formed a higher low right here, and then it formed a lower high right there. It should have pushed up and formed another higher high like it did here, and then formed another higher low like it did here. But instead, it formed a lower low, and then boom, price broke those higher lows, and then pulled back to retest like it did within PayPal. Because within PayPal, if we go back to that really quick, price already previously broke that low on Thursday, which is when I was expecting to put options. You feel me? But then it started pulling back. But that's when I realized that, oh, this pullback is ultimately a retest to form a lower high compared to the previous high. So then it can continue further down. And that's why we kept this put option in. And then, so yeah, so back to here. All right, it formed that lower high, broke those higher lows, and then pulled back to retest within the area. There was a gap within the area, et cetera, et cetera. And boom, once it did that, you could have easily got into put options because the PayPal thing was held overnight. Could have got into it maybe around here-ish. You feel what I'm saying? Or whenever it starts showing you a retracement, boom, right above that high, take it all the way down until it just starts to, you know what I'm saying? And boom, that's a 1 to 24 RR. Guess what? Boom, this is QQ. We got a higher high, higher low, lower high, big bearish candle. It's on the weekly time frame. And, if price does want to come down and break this low right here, we can expect a continuation further down, maybe to here or here, or even lower, so we could have very much big moves within QQ right now because we have been very, very bullish. Looks like a mountain, so we could have a very big crash within QQ soon, depending on how it wants to react to this weekly low right here. So, but yeah, that's really it. So overall, being able to take and find these huge moves, these 1 to 21 RRs and 1 to 24 RR trades that give you 500% and more within just a couple of minutes of market open, just like it happened within the Discord with me, my Discord on PayPal. Understand market structure. Understand market analysis using the hourly time frames. With the stocks, when it comes to like investments and stuff, I use like the weekly and the monthly time frame. But when it comes to just like day-to-day trading, I mainly use the hourly time frames and the daily time frames. But ultimately, I hope that you understand market structure, market analysis. So then now whenever you to go analyze a market, doesn't matter what you trade, but let's say you trade stocks or options, whatever, stock options, you know what I'm saying? You can also find these huge moves. You can also see, oh my gosh, like right here, QQ, it's forming a lower high when it should have pushed up and made a higher high. And now we can expect price to break here, forming a lower low. It might come back to retest, or it might just continue all the freaking way down. You feel what I'm saying? And then boom, that's a big move. That's a lot of money right there. You feel what I'm saying? And that's a lot of money you can miss out on if you don't understand market structure, market analysis. So I hope you learned something in this video. If you need to run it back, run it back. If you need to slow it down, slow it down. If you want to DM me personally, you can. Discord and Instagram are in my link tree in the bio. I'm always active on there. And that's free, obviously. And in my mentorship, I still got my 2 free mentorship sessions because you don't know me and you have no business paying me if you don't know me. So that's why those 2 free sessions are free. So then that's why the 2 first sessions are free. So you can build that trust with me and see if I'm even the right teacher for you, instead of paying money like most people expect you to do, is pay the money. And guess what? They're not even the right teacher for you. You can't even learn from them because they don't teach in a way that's helpful and is easy for you to learn correctly. So that's why my 2 first sessions are free. So there's no risk in any of those things, man. So all that stuff's in my link tree in the bio. Go tap into all those things. And yeah, you can like, subscribe, go to the gram. Just trying to help some people out. God bless y'all. See y'all next time.